Question 1. Risk assessment procedures indicate a client is seeking to aggressively minimize their tax liability for the upcoming financial year. The client has proposed several strategies that appear to exploit ambiguities in current tax legislation. Which of the following represents the most professionally responsible and compliant approach for the firm to take? Option A. Decline to advise on any tax minimization strategies, recommending the client seek advice from a less risk-averse firm that specializes in aggressive tax planning. Option B. Implement the client's proposed strategies without question, as the client is ultimately responsible for their tax affairs and has explicitly requested these actions. Option C. Advise the client on the proposed strategies, clearly outlining the potential risks of challenge by tax authorities and the possibility of retrospective tax liabilities, while also proposing alternative, fully compliant tax planning measures. Option D. Proceed with implementing the client's proposed strategies, assuming that if they are technically legal, they are acceptable, and the firm has no further obligation to consider the intent of the legislation or potential for future challenges. The correct answer is C. Advise the client on the proposed strategies, clearly outlining the potential risks of challenge by tax authorities and the possibility of retrospective tax liabilities, while also proposing alternative, fully compliant tax planning measures. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a client's desire for aggressive tax optimization and the firm's obligation to adhere to tax laws and ethical standards. The challenge lies in balancing client service with regulatory compliance and professional integrity. It requires a nuanced understanding of permissible tax planning versus aggressive or potentially illegal tax evasion. The firm must navigate the fine line between providing legitimate advice and facilitating non-compliant activities, which could lead to severe reputational damage, legal penalties, and professional sanctions. Correct approach analysis. The correct approach represents best professional practice because it prioritizes adherence to the spirit and letter of tax legislation, as well as professional ethical codes. This involves a thorough understanding of the relevant tax laws and regulations, and advising the client on strategies that are compliant and sustainable. It demonstrates a commitment to professional integrity and responsible client advisory. This approach aligns with the fundamental duty of tax professionals to act with honesty and uphold the law, ensuring that advice provided is both beneficial to the client within legal bounds and defensible to regulatory authorities. Incorrect approaches analysis. An approach that focuses solely on minimizing tax liability without regard for legal compliance risks significant regulatory and ethical failures. This could be interpreted as promoting or facilitating tax evasion, which is a direct violation of tax laws and professional conduct rules. It disregards the firm's responsibility to act within the legal framework and could expose both the client and the firm to penalties, interest, and criminal prosecution. An approach that blindly follows the client's instructions without independent professional judgment or due diligence is also professionally unacceptable. This fails to uphold the professional's duty of care and expertise. It can lead to the adoption of non-compliant strategies that the client may not fully understand the implications of, thereby exposing them to risk. Ethically, professionals are expected to provide informed advice, not merely execute client directives that may be ill-advised or illegal. An approach that involves recommending strategies that are technically legal, but designed to exploit loopholes in a manner that contravenes the underlying intent of the legislation is ethically questionable and carries significant risk. While not outright illegal, such aggressive tax avoidance schemes can be challenged by tax authorities and may be deemed abusive. This can lead to retrospective tax liabilities, penalties, and reputational damage for both the client and the advisor. It demonstrates a lack of professional judgment in prioritizing aggressive outcomes over sustainable and compliant tax planning. Professional reasoning. Professionals should adopt a decision-making process that begins with a clear understanding of the client's objectives. This understanding must then be rigorously assessed against the prevailing regulatory framework and professional ethical standards. The process involves identifying potential strategies, evaluating their legality, sustainability, and ethical implications. If a client's request pushes the boundaries of compliance or ethical conduct, the professional must clearly articulate the risks and limitations and propose alternative compliance strategies. Open and honest communication with the client about the legal and ethical boundaries is paramount. In situations where a client insists on non-compliant or ethically dubious strategies, the professional must be prepared to disengage from the engagement to uphold their professional integrity. Question 2. Examination of the data shows that a client, a prominent figure in the industry, has inadvertently provided incomplete information regarding a recent transaction, potentially leading to a misstatement in their regulatory filings. The professional handling the account suspects this may be a breach of reporting requirements. Option A. Disregard the potential breach, attributing it to an administrative error and assuming the client's reputation will prevent any regulatory scrutiny. Option B. Immediately report the suspected breach to the relevant regulatory authority without further investigation, citing the client's prominence as a factor in the urgency. Option C. Advise the client to correct the filing themselves without reporting the initial oversight to the firm or regulatory bodies, assuming the client will rectify the error. Option D. Conduct a thorough internal review to gather all relevant facts and evidence, consult with the firm's compliance and legal departments, and then proceed with reporting if the review confirms a breach, following the established regulatory procedures. The correct answer is D. Conduct a thorough internal review to gather all relevant facts and evidence, consult with the firm's compliance and legal departments, and then proceed with reporting if the review confirms a breach, following the established regulatory procedures. Explanation. This scenario presents a professional challenge due to the inherent conflict between client confidentiality and the obligation to report potential regulatory breaches. The core of the challenge lies in balancing the duty of trust owed to a client with the broader responsibility to uphold the integrity of the financial markets and comply with legal mandates. Careful judgment is required to navigate this delicate balance, ensuring that actions taken are both legally sound and ethically defensible. The correct approach represents best professional practice because it prioritizes adherence to the regulatory framework governing financial advice and reporting. Specifically, it involves a thorough internal review to gather all necessary facts and evidence before making a decision on reporting. This aligns with the principles of due diligence and responsible conduct expected of professionals operating within regulated environments. By seeking guidance from compliance and legal departments, the professional ensures that any reporting is done accurately, comprehensively, and in accordance with the specific reporting obligations stipulated by the relevant regulatory body. This proactive and structured approach minimizes the risk of both underreporting, which could lead to regulatory sanctions, and overreporting, which could damage client relationships unnecessarily or lead to unfounded investigations. An incorrect approach that involves ignoring the potential breach due to the client's status or the perceived minor nature of the issue would be a significant regulatory and ethical failure. This demonstrates a disregard for the law and a failure to uphold professional standards, potentially exposing the firm and the individual to severe penalties. Another incorrect approach, such as immediately reporting the suspicion without proper investigation or consultation, could lead to a false accusation, damage the client relationship irreparably, and potentially trigger an unnecessary regulatory inquiry, wasting valuable resources. This approach lacks due diligence and could be seen as an overreaction or a failure to exercise professional discretion. The professional decision-making process for similar situations should involve a systematic approach. 1. Identify the potential issue and its implications. 2. Gather all relevant facts and evidence through a thorough, objective investigation. 3. Consult internal policies, procedures, and relevant regulatory guidelines. 4. Seek advice from internal compliance, legal, or senior management. 5. Evaluate the findings against regulatory requirements and ethical obligations. 6. Determine the appropriate course of action, which may include reporting, further investigation, or client communication, based on the evidence and expert advice. 7. Document all steps taken and decisions made. Question 3. Performance analysis shows that a significant number of candidates for the Mahindra hiring assessment test are providing personal data through online forms. To streamline the assessment process and potentially identify future talent pools, the assessment team is considering automatically collecting additional data points beyond those explicitly requested for the current assessment, and retaining all collected data indefinitely for future recruitment drives, which approach best aligns with the regulatory framework governing the Mahindra hiring assessment test. Option A. Collect only the data explicitly requested for the current assessment and immediately delete all candidate data upon completion of the assessment to avoid any compliance risks. Option B. Automatically collect additional data points beyond the current assessment requirements, assuming this data will be valuable for future recruitment, and store it securely without explicit consent for this extended use. Option C. Implement a clear data minimization policy. Collect only data essential for the current assessment. Obtain explicit informed consent for any additional data processing or retention beyond the immediate assessment needs, and establish defined data retention periods. Option D. Proceed with collecting all available data and retaining it indefinitely, as participation in the assessment implies consent for all data usage in future recruitment. The correct answer is C. Implement a clear data minimization policy. Collect only data essential for the current assessment. Obtain explicit informed consent for any additional data processing or retention beyond the immediate assessment needs, and establish defined data retention periods. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires an individual to interpret and apply complex regulatory requirements to a practical business situation. The challenge lies in balancing the need for efficient data processing with the stringent data privacy obligations mandated by the Tech Mahindra hiring assessment tests governing regulations. Misinterpreting these regulations can lead to significant compliance breaches, reputational damage, and potential legal repercussions. Careful judgment is required to ensure that data handling practices are both effective for assessment purposes and fully compliant with the law. Correct approach analysis. The correct approach involves a thorough understanding of the specific data protection principles and consent requirements outlined within the Tech Mahindra hiring assessment tests regulatory framework. This approach prioritizes obtaining explicit, informed consent from candidates before collecting and processing their personal data for assessment purposes. It also ensures that data is collected only for specified, legitimate purposes and is retained for no longer than necessary. This aligns with best professional practice by demonstrating a commitment to data privacy, building trust with candidates, and mitigating legal and ethical risks. Adherence to these principles is a direct reflection of the regulatory obligations designed to protect individuals' personal information. Incorrect approaches analysis. One incorrect approach involves proceeding with data collection and processing without obtaining explicit consent, assuming that participation in the assessment implies consent. This is a regulatory failure because it violates the principle of informed consent, which is a cornerstone of data protection laws. Candidates have a right to know how their data will be used and to actively agree to it. Another incorrect approach is to collect more data than is strictly necessary for the assessment, under the guise of future potential use. This constitutes a failure to adhere to the principle of data minimization, which mandates collecting only data that is relevant and necessary for the stated purpose. Furthermore, retaining data indefinitely without a clear justification or a defined retention policy is a breach of data retention regulations. A third incorrect approach might be to share candidate data with third parties without a clear legal basis or explicit consent, which is a severe violation of data privacy laws and ethical standards. Professional reasoning. Professionals facing such situations should adopt a structured decision-making process. First, they must identify and thoroughly understand the relevant regulatory framework governing data handling within the context of the Tech Mahindra hiring assessment test. Second, they should assess the specific data processing activities planned and map them against these regulatory requirements. Third, they must evaluate potential risks, including compliance breaches and ethical concerns. Finally, they should choose the approach that demonstrably upholds regulatory obligations and ethical principles, prioritizing transparency, consent, and data minimization. This systematic approach ensures that decisions are defensible, compliant, and aligned with professional integrity. Question 4. Cost-benefit analysis shows that a new AI-driven client onboarding platform could significantly reduce processing times and operational costs, but its integration involves novel data handling protocols that have not been extensively tested in a live regulatory environment. What is the most prudent course of action for a financial services firm? Option A. Implement the AI platform across all client onboarding processes immediately to capture the projected cost savings and efficiency gains. Option B. Conduct a thorough risk assessment, including a pilot program with a limited client segment, to evaluate the technology's performance, security, and compliance implications before a full rollout. Option C. Defer the adoption of the AI platform indefinitely until the technology matures and all potential risks are completely eliminated. Option D. Deploy the AI platform without additional staff training, assuming existing operational procedures will suffice for the new system. The correct answer is A. Implement the AI platform across all client onboarding processes immediately to capture the projected cost savings and efficiency gains. Explanation. Scenario analysis. This scenario presents a professional challenge where a new technology, while promising efficiency gains, introduces novel risks that are not fully understood. The challenge lies in balancing the potential benefits against these unknown risks, especially when the technology impacts client data and regulatory compliance. A hasty adoption without proper due diligence could lead to significant financial penalties, reputational damage, and breaches of client trust, all of which are critical concerns in the financial services industry. Correct approach analysis. The correct approach emphasizes a phased, risk-aware implementation. This aligns with regulatory expectations for robust risk management frameworks, particularly concerning new technologies. Financial institutions are mandated to conduct thorough due diligence, including impact assessments and pilot testing, before full deployment. This approach demonstrates a commitment to client data security and regulatory adherence by proactively identifying and mitigating potential issues. It reflects best professional practice by prioritizing client protection and compliance, ensuring that innovation does not come at the expense of established legal and ethical obligations. Incorrect approaches analysis. One incorrect approach involves immediate, full-scale adoption based solely on projected cost savings. This fails to acknowledge the inherent risks of new technology and violates the principle of prudent risk management. Regulators expect a measured approach, not a leap of faith. Such an action could lead to breaches of data protection regulations, e.g., GDPR if applicable, or equivalent local regulations and fiduciary duties, resulting in severe penalties. Another incorrect approach is to defer adoption indefinitely due to fear of the unknown. While caution is necessary, outright refusal to explore beneficial technologies can lead to a competitive disadvantage and may not align with a firm's duty to act in the best interests of its clients by offering efficient and potentially cost-effective services. However, in this specific context, the primary failure is not a direct regulatory breach, but a missed opportunity that could indirectly impact client service if competitors adopt similar efficiencies. More critical failure is the lack of a structured process to evaluate and potentially mitigate the risks. A third incorrect approach is to implement the technology without adequate training or oversight for staff. This creates a significant operational risk and increases the likelihood of errors that could lead to data breaches or non-compliance. Professional standards and regulatory guidelines mandate that staff are competent and that systems are managed effectively. Failure to provide training and oversight is a direct contravention of these requirements. Professional reasoning. Professionals should adopt a structured decision-making process that begins with a comprehensive risk assessment of any new technology. This involves identifying potential benefits, evaluating associated risks, technical, operational, regulatory, ethical, and developing mitigation strategies. A pilot program or phased rollout allows for real-world testing and refinement before full deployment. Continuous monitoring and evaluation are crucial to ensure ongoing compliance and security. This systematic approach ensures that decisions are informed, responsible, and aligned with both business objectives and regulatory obligations. Question 5. Analysis of how a financial advisor should respond when a client, involved in a new and complex international business venture, makes vague but concerning statements about needing to move funds quickly and discreetly to avoid unnecessary scrutiny from foreign tax authorities, considering the advisor's duty of confidentiality and the regulatory framework for preventing financial crime. Option A. Ignore the client's statements as they are vague and do not constitute a direct violation of any known regulation, assuming the client is acting within legal boundaries. Option B. Directly question the client about the specific reasons for their urgency and the nature of the scrutiny they wish to avoid to ascertain the legitimacy of the transaction. Option C. Advise the client on the best methods for transferring funds internationally to ensure speed and discretion. Prioritizing the client's stated objective. Option D. Discreetly gather more information about the client's business and the source/destination of funds, and immediately consult the firm's compliance department for guidance on potential reporting obligations. The correct answer is D. Discreetly gather more information about the client's business and the source/destination of funds, and immediately consult the firm's compliance department for guidance on potential reporting obligations. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between client confidentiality and the obligation to report potential financial misconduct. A financial advisor must navigate the delicate balance of maintaining client trust while adhering to regulatory requirements designed to prevent illicit activities. The pressure to act decisively, without compromising client relationships or violating legal mandates, requires careful judgment and a thorough understanding of applicable regulations. Correct approach analysis. The correct approach involves discreetly gathering further information and consulting with the firm's compliance department before taking any direct action with the client or reporting to external bodies. This aligns with best professional practice as it allows for a thorough and informed assessment of the situation. It respects the principle of client confidentiality by not making premature accusations, while simultaneously fulfilling the ethical and regulatory duty to investigate potential breaches of financial regulations. Consulting compliance ensures adherence to the firm's internal policies and relevant legal frameworks, such as those governing anti-money laundering (AML) and suspicious activity reporting (SAR) within the specified jurisdiction. This methodical approach minimizes the risk of unfounded accusations and ensures that any subsequent actions are legally sound and ethically justifiable. Incorrect approach is analysis. One incorrect approach is to immediately confront the client with suspicions. This is professionally unacceptable because it breaches client confidentiality without due process, potentially damaging the client relationship irreparably and exposing the firm to legal repercussions if the suspicions are unfounded. It also bypasses the firm's internal controls and regulatory reporting mechanisms, which are designed to ensure proper investigation and reporting of suspicious activities. Another incorrect approach is to ignore the suspicious activity, hoping it will resolve itself. This is a severe regulatory and ethical failure. It demonstrates a disregard for the firm's compliance obligations and the broader regulatory framework aimed at preventing financial crime. By failing to act, the professional becomes complicit in potential misconduct and exposes themselves and the firm to significant penalties, including fines and reputational damage. A third incorrect approach is to report the suspicion to external authorities without first consulting the firm's compliance department. While reporting is a crucial step, doing so prematurely and without internal consultation can lead to misreporting, incomplete information, and potential legal issues. It undermines the firm's internal compliance structure and may not align with the specific reporting protocols mandated by the jurisdiction's financial regulators. Professional reasoning. Professionals in this field must adopt a structured decision-making process. This begins with recognizing potential red flags. Upon identification, the next step is to discreetly gather objective facts and evidence. Simultaneously, it is imperative to consult internal compliance policies and seek guidance from the firm's compliance officer or legal counsel. This internal consultation is critical for understanding the specific reporting obligations and procedures within the relevant jurisdiction. Only after this internal review and guidance should any external reporting be considered, ensuring that all actions are compliant, ethical, and professionally sound. Question 6. Market research demonstrates that clients often seek to optimize their financial strategies, sometimes pushing the boundaries of regulatory guidelines. Imagine you are a financial advisor at Mahindra, and a long-standing, high-value client expresses a strong desire to implement a specific investment strategy that you believe, based on your understanding of the Mahindra hiring assessment tests regulatory framework, may not be fully compliant with certain disclosure requirements. The client is insistent, citing their past successful experiences with similar, though perhaps less regulated approaches. How should you proceed? Option A. Advise the client to seek independent legal counsel to review the strategy, effectively deferring your own professional judgment and responsibility. Option B. Proceed with the client's requested strategy, assuming that their past success implies a level of acceptable risk and that the regulatory nuances are minor. Option C. Clearly explain to the client the specific regulatory requirements that the proposed strategy may contravene, detailing the implications of noncompliance, and explore alternative compliance strategies that can achieve similar objectives. Option D. Inform the client that you cannot fulfill their request due to internal policy, without elaborating on the specific regulatory reasons, to avoid potentially confusing them. The correct answer is C. Clearly explain to the client the specific regulatory requirements that the proposed strategy may contravene, detailing the implications of noncompliance, and explore alternative compliance strategies that can achieve similar objectives. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a client's desire for a specific outcome and the advisor's obligation to provide objective, compliant advice. The advisor must navigate the client's persuasive tactics while upholding regulatory standards and ethical duties. The pressure to retain a valuable client can be significant, making it crucial to maintain professional integrity and avoid actions that could lead to regulatory breaches or reputational damage. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing regulatory compliance and ethical conduct. Specifically, it involves clearly communicating the limitations imposed by regulations and the firm's internal policies. This approach upholds the advisor's duty of care and professional responsibility to act in the client's best interest within the bounds of the law. It also aligns with the principles of transparency and honesty, which are foundational to building trust and maintaining long-term client relationships, even when delivering unwelcome news. Adhering to the regulatory framework ensures that all advice and actions are legally sound and ethically defensible. Incorrect approaches analysis. One incorrect approach involves yielding to the client's pressure and proceeding with the requested action, despite regulatory concerns. This constitutes a failure to adhere to the regulatory framework, potentially leading to breaches of conduct rules, fines, and disciplinary action. Ethically, it violates the duty to act with integrity and competence, as it prioritizes client satisfaction over compliance and sound professional judgment. Another incorrect approach might involve providing misleading information or downplaying the regulatory implications to appease the client. This is a direct violation of honesty and transparency principles, which are critical regulatory and ethical requirements. Such actions can lead to client detriment, regulatory sanctions, and severe damage to the advisor's and firm's reputation. A further incorrect approach could be to simply refuse the client's request without providing a clear, reasoned explanation based on regulatory constraints. While the refusal itself might be justified, the lack of proper communication and explanation fails to educate the client and manage their expectations effectively. This can lead to client dissatisfaction and a breakdown in the professional relationship, without adequately addressing the underlying compliance issues. Professional reasoning. Professionals should employ a decision-making framework that begins with a thorough understanding of the relevant regulatory framework and internal policies. When faced with a client request that appears to conflict with these guidelines, the professional should 1. Identify the specific regulatory or policy concern. 2. Clearly and calmly communicate the concern to the client, explaining the rationale behind the limitation. 3. Explore alternative solutions that are compliant and still meet the client's underlying needs. 4. Document all communications and decisions meticulously. 5. Seek guidance from compliance or legal departments if uncertainty remains. This structured approach ensures that decisions are informed, defensible, and aligned with professional obligations. Question 7. The control framework reveals that a senior IT consultant at Mahindra, tasked with guiding a key client through a critical software selection process, has recently acquired a significant number of shares in one of the primary software vendors being considered. The consultant has not yet informed the client or their Mahindra superiors about this personal investment. What is the most appropriate immediate course of action for the consultant? Option A. Immediately disclose the personal financial interest to both the client and Mahindra management and seek guidance on managing the conflict. Option B. Discreetly highlight the strengths of the vendor in which the investment is held while still presenting other options to subtly influence the client's decision. Option C. Continue with the consultation process as planned ensuring the advice provided remains objective, and consider disclosing the investment later if the vendor is selected. Option D. Resign from the project immediately, without disclosing the reason for resignation to avoid any appearance of impropriety. The correct answer is A. Immediately disclose the personal financial interest to both the client and Tech Mahindra management, and seek guidance on managing the conflict. Explanation. The control framework reveals a potential conflict of interest scenario within Tech Mahindra's IT consulting division. A senior consultant, responsible for advising a client on a significant software procurement, has a personal financial stake in one of the competing vendors. This situation is professionally challenging because it blurs the lines between objective professional advice and personal gain, potentially compromising the integrity of the client's decision-making process and Tech Mahindra's reputation. Careful judgment is required to navigate this ethically and legally. The correct approach, which involves immediate disclosure of the personal financial interest to both the client and Tech Mahindra's management, represents best professional practice. This aligns with Tech Mahindra's internal code of conduct and general ethical principles governing professional services. Specifically, it adheres to the principle of transparency and the duty to avoid conflicts of interest. By disclosing, the consultant upholds their fiduciary duty to the client and demonstrates commitment to Tech Mahindra's values of integrity and trust. This proactive disclosure allows for appropriate mitigation strategies, such as recusal from the decision-making process or independent oversight, ensuring the client receives unbiased advice. An incorrect approach involving the consultant proceeding with advice without disclosure is a significant ethical and potential regulatory failure. It violates the duty of loyalty to the client and breaches Tech Mahindra's internal policies on conflicts of interest. This lack of transparency can lead to a perception of undue influence, potentially resulting in a suboptimal software choice for the client and reputational damage for Tech Mahindra. Another incorrect approach, such as attempting to subtly steer the client towards the vendor in which the consultant has a stake, constitutes fraudulent behavior and a severe breach of professional ethics. This directly undermines the client's trust and could lead to legal repercussions for both the consultant and the company. A third incorrect approach, where the consultant only discloses the interest after the decision is made, is also unacceptable. This is a reactive measure that does not prevent the potential for bias during the decision-making process and still erodes trust once discovered. Professionals should adopt a decision-making framework that prioritizes transparency and ethical conduct. When faced with a potential conflict of interest, the immediate steps should be: 1. Identify the potential conflict. 2. Consult internal policies and ethical guidelines. 3. Disclose the conflict to all relevant parties, client, employer, promptly and fully. 4. Seek guidance on appropriate mitigation measures, which may include recusal or independent review. This proactive and transparent approach safeguards professional integrity and client interests. Question 8. Research into the ethical and regulatory implications of utilizing customer interaction data for predictive analytics. A consultant discovers that the client wishes to analyze call recordings and chat logs to identify patterns that could lead to new service offerings. The consultant is aware that the data contains personal information, including potentially sensitive details shared during customer service interactions. The client has provided a general consent form for service provision, but it does not explicitly detail the use of this data for predictive analytics for new service development. What is the most appropriate course of action for the consultant to ensure compliance with data protection principles and maintain professional integrity? Option A. Advise the client to obtain explicit, informed consent from customers specifically for the use of their interaction data in predictive analytics for new service development, and to clearly outline the purposes and potential benefits. Option B. Collect and anonymize the data to a degree that makes individual identification impossible before conducting the predictive analytics, thereby bypassing the need for specific consent. Option C. Proceed with the analysis using the existing general consent form, assuming it covers all data usage for business improvement and innovation. Option D. Inform the client that the data cannot be used for predictive analytics due to the lack of specific consent and recommend focusing on other, less sensitive data sources. The correct answer is A. Advise the client to obtain explicit, informed consent from customers specifically for the use of their interaction data in predictive analytics for new service development, and to clearly outline the purposes and potential benefits. Explanation. Scenario analysis. This scenario presents a professional challenge involving the interpretation and application of data privacy regulations within a technology consulting context. The core difficulty lies in balancing the client's desire for comprehensive data analysis with the stringent requirements of data protection laws, specifically the General Data Protection Regulation, GDPR. If that is the assumed jurisdiction for the Tech Mahindra hiring assessment test, professionals must navigate the complexities of consent, data minimization, and purpose limitation to ensure compliance and maintain client trust. The pressure to deliver insights quickly can create a temptation to overlook or downplay privacy concerns, making careful judgment and adherence to regulatory frameworks paramount. Correct approach analysis. The correct approach involves proactively identifying and mitigating privacy risks by seeking explicit, informed consent for the specific purposes of data processing, and ensuring that only necessary data is collected and used. This aligns with the GDPR principles of lawfulness, fairness, transparency, purpose limitation, data minimization, accuracy, storage limitation, integrity, and confidentiality. By prioritizing a privacy-by-design methodology, the consultant demonstrates a commitment to ethical data handling and regulatory compliance, which is a cornerstone of professional practice in data-driven industries. This approach safeguards both the client and the individuals whose data is being processed, fostering long-term trust and avoiding potential legal repercussions. Incorrect approach is analysis. One incorrect approach involves proceeding with data analysis without obtaining explicit consent for all intended uses. This directly violates GDPR Article 6, which requires a lawful basis for processing personal data. Relying solely on implied consent or assuming consent based on a general service agreement is insufficient for sensitive data processing or for purposes beyond the initial agreement. This failure constitutes a significant regulatory and ethical breach, exposing the client and the consulting firm to substantial fines and reputational damage. Another incorrect approach is to collect and process a broad range of personal data, even if some of it might be tangentially useful, without a clear justification for each data point. This contravenes the GDPR data minimization principle, Article 5(1)(c), which mandates that personal data collected should be adequate, relevant, and limited to what is necessary in relation to the purposes for which they are processed. Such an approach increases the risk of data breaches and unauthorized access as more data is exposed. It also makes it harder to demonstrate compliance with purpose limitation. A third incorrect approach is to use the collected data for purposes not originally disclosed to the data subjects or for which consent was not obtained. This violates the principle of purpose limitation, Article 5(1)(b), which states that personal data shall be collected for specified, explicit, and legitimate purposes and not further processed in a manner that is incompatible with those purposes. This can lead to a loss of trust and legal challenges, as individuals have a right to know how their data is being used. Professional reasoning. Professionals should adopt a structured decision-making process that begins with a thorough understanding of the project's objectives and the types of data involved. This should be followed by a comprehensive assessment of applicable data protection regulations. Before any data processing commences, a risk assessment should be conducted, identifying potential privacy implications. The next step is to design the data collection and processing activities with privacy principles embedded from the outset, privacy by design. This includes defining clear purposes, obtaining appropriate consent, and implementing data minimization strategies. Regular reviews and audits should be conducted to ensure ongoing compliance. When in doubt, seeking legal counsel or consulting with a data protection officer is a crucial step in responsible professional conduct. Question 9. Benchmark analysis indicates that a client's legacy IT infrastructure, while operational, is nearing end of life and presents significant security vulnerabilities and potential compliance risks. The client, a small to medium-sized enterprise, is hesitant to invest in a full system upgrade due to budget constraints and a perception that the current system is good enough. As an IT consultant, what is the most professional and ethically sound approach to advise the client? Option A. Conduct a detailed risk assessment, quantify potential financial and reputational impacts of security breaches and noncompliance, and present a phased upgrade plan with clear ROI and cost-benefit analysis, emphasizing long-term security and operational efficiency. Option B. Agree with the client that the current system is adequate and postpone any recommendations for upgrades until a critical failure occurs, to avoid immediate expenditure. Option C. Immediately propose the most advanced and comprehensive upgrade solution available, irrespective of the client's budget or immediate needs, to ensure maximum future-proofing. Option D. Minimize the discussion of security risks and compliance issues to avoid alarming the client, focusing instead on minor performance enhancements that can be implemented within their current budget. The correct answer is A. Conduct a detailed risk assessment, quantify potential financial and reputational impacts of security breaches and noncompliance, and present a phased upgrade plan with clear ROI and cost-benefit analysis, emphasizing long-term security and operational efficiency. Explanation. Scenario analysis. This scenario presents a common challenge in IT consulting where a client's existing infrastructure, while functional, is outdated and potentially poses security risks. The challenge lies in balancing the client's immediate cost concerns with the long-term benefits of modernization, particularly concerning data security and compliance. The consultant must navigate the client's resistance to change, which is often rooted in budget limitations and a lack of perceived urgency, while upholding professional responsibility to advise on best practices and regulatory adherence. Correct approach analysis. The correct approach involves a thorough risk assessment and a clear articulation of the benefits of upgrading, framed in terms of compliance and security. This aligns with professional ethical obligations to act in the client's best interest and to provide competent advice. Specifically, under general IT consulting best practices and implied professional standards, as no specific jurisdiction is provided, we assume general professional conduct. A consultant has a duty to inform clients of significant risks associated with their current systems, highlighting potential data breaches, regulatory noncompliance, e.g., GDPR, CCPA if applicable, though not specified here. The principle of data protection is universal, and the associated financial and reputational damage justifies the recommendation for an upgrade. Presenting a phased approach with clear ROI and cost-benefit analysis demonstrates a commitment to the client's financial well-being while addressing critical technical debt. Incorrect approach is analysis. One incorrect approach is to simply accept the client's decision without further consultation or detailed explanation of risks. This fails to meet the professional duty of care and competence. Ethically, it could be seen as negligence, as the consultant is aware of potential vulnerabilities and does not adequately inform the client. This approach prioritizes short-term client satisfaction over long-term client security and compliance, which is unprofessional. Another incorrect approach is to aggressively push for the most expensive, cutting-edge solution without considering the client's budget or specific needs. While the intention might be to provide the best solution, this ignores the practical realities of the client's financial constraints and could lead to a solution that is unmanageable or unnecessary. This demonstrates a lack of client centricity and potentially a failure to conduct a proper needs assessment, which is a core professional responsibility. A third incorrect approach is to downplay the security risks to appease the client. This is a direct ethical failure and potentially a breach of professional conduct. Misrepresenting the severity of security vulnerabilities or the implications of noncompliance can lead to significant harm to the client, including data breaches, regulatory fines, and reputational damage. A professional consultant must be transparent and honest about risks. Professional reasoning. Professionals should employ a structured decision-making process that begins with a comprehensive understanding of the client's current state, their business objectives, and their risk tolerance. This involves active listening and probing questions. Following this, a thorough assessment of the technical landscape, including security vulnerabilities and compliance gaps, is crucial. The next step is to develop a range of potential solutions, evaluating each against the client's needs, budget, and risk appetite. The final stage involves clear, transparent communication of findings, recommendations, and associated risks and benefits, empowering the client to make an informed decision. This process ensures that advice is both technically sound and professionally responsible. Question 10. The performance metrics show a significant initial dip in a candidate's output during the first week of a simulated project, followed by a steady increase in subsequent weeks. The hiring manager is concerned about this initial performance. What is the most appropriate way to interpret and communicate these findings in the context of the Tech Mahindra hiring assessment test? Option A. Acknowledge the initial dip but emphasize the subsequent consistent improvement, suggesting the candidate demonstrated resilience and a capacity for learning and adaptation. Option B. Highlight the overall trend of improvement without mentioning the initial dip, as the final performance is strong. Option C. Conclude that the initial dip indicates a fundamental weakness that outweighs the later improvement, and therefore the candidate is not suitable. Option D. Focus on the initial dip as indicative of a potential struggle to adapt, and recommend further investigation into the candidate's problem-solving skills under pressure. The correct answer is D. Focus on the initial dip as indicative of a potential struggle to adapt, and recommend further investigation into the candidate's problem-solving skills under pressure. Explanation. This scenario presents a professional challenge because it requires balancing the need for timely and accurate reporting with the potential for misinterpretation or misuse of preliminary data. The pressure to provide immediate insights can lead to premature conclusions that may not be fully substantiated, potentially impacting client trust and regulatory compliance. Careful judgment is required to ensure that any information shared is presented with appropriate caveats and context. The correct approach represents best professional practice because it prioritizes data integrity and responsible communication. By highlighting that the metrics are preliminary and subject to change, it adheres to the ethical obligation of transparency and avoids misleading stakeholders. This aligns with the principles of professional conduct that emphasize accuracy, honesty, and the avoidance of misrepresentation, which are implicitly expected in any professional assessment context, including hiring. An incorrect approach that focuses solely on the negative aspects without acknowledging potential improvements or contextual factors would be professionally unacceptable. This could lead to biased assessments and unfair judgments, potentially violating principles of fairness and objectivity. Another incorrect approach that extrapolates future performance based on limited initial data without acknowledging the inherent uncertainty would be a failure of due diligence and could lead to flawed decision-making. This demonstrates a lack of analytical rigor and an over-reliance on incomplete information, which is professionally unsound. Professionals should employ a decision-making framework that involves 1. Thoroughly understanding the data and its limitations. 2. Considering the audience and the purpose of the communication. 3. Framing information with appropriate context and caveats. And 4. Seeking to provide a balanced and objective perspective. In a hiring assessment context, this means presenting performance data in a way that is informative but not definitive, allowing for further evaluation and discussion. Question 11. Which approach would be most appropriate for an IT consultant when a client requests a new data processing system that, while technically feasible, appears to involve the collection and storage of personal data beyond what is strictly necessary for the stated business purpose, potentially conflicting with data protection regulations? Option A. Immediately implement the requested system as the client is paying for the service and it is technically achievable. Option B. Inform the client that the request cannot be fulfilled due to potential data protection issues without offering any further guidance or alternatives. Option C. Conduct a detailed data protection impact assessment, identify specific GDPR compliance concerns, and propose alternative, more data-minimizing solutions that still achieve the client's core objectives. Option D. Proceed with the implementation, but briefly mention the data privacy risks in a general, non-specific manner to the client. The correct answer is C. Conduct a detailed data protection impact assessment, identify specific GDPR compliance concerns, and propose alternative, more data-minimizing solutions that still achieve the client's core objectives. Explanation. Scenario analysis. This scenario presents a common challenge in IT consulting where a client requests a solution that, while technically feasible, carries significant data privacy risks under the General Data Protection Regulation, GDPR. The consultant must balance the client's immediate business needs with their legal obligations to protect personal data. The challenge lies in identifying and articulating these risks clearly to the client without alienating them or appearing obstructive. Correct approach analysis. The correct approach involves a thorough risk assessment that explicitly considers the GDPR principles, particularly data minimization, purpose limitation, and the need for lawful basis for processing. It requires the consultant to identify potential breaches of these principles, document the findings, and then propose alternative compliance solutions. This aligns with the GDPR emphasis on privacy by design and by default, and the accountability principle, which mandates that organizations demonstrate compliance. Professional practice dictates that consultants act as trusted advisors, proactively identifying and mitigating risks, especially those with legal and ethical ramifications. Incorrect approaches analysis. One incorrect approach involves immediately agreeing to implement the client's request without further investigation. This fails to uphold the consultant's professional responsibility to advise on compliance and could lead to significant GDPR violations, including hefty fines and reputational damage for both the client and the consulting firm. Demonstrates a lack of due diligence and a disregard for data protection laws. Another incorrect approach is to refuse the request outright without providing any explanation or alternative solutions. While it avoids direct complicity in a potential violation, it is unprofessional and unhelpful. It fails to educate the client on the risks and misses an opportunity to guide them towards a compliant outcome, potentially damaging the client relationship. A third incorrect approach is to proceed with the implementation, but downplay the data privacy risks to the client. This is ethically unsound and potentially fraudulent. It misleads the client about their legal obligations and exposes them to significant regulatory scrutiny and penalties under the GDPR. It violates the principle of transparency and good faith expected in professional consulting engagements. Professional reasoning. Professionals should adopt a structured approach to such requests. First, thoroughly understand the client's objective. Second, identify all potential data processing activities involved. Third, assess these activities against relevant regulations, in this case, the GDPR. Fourth, clearly articulate any identified risks and their potential consequences. Fifth, propose compliant alternatives that still meet the client's underlying business needs. This process ensures that advice is both technically sound and legally compliant, fostering trust and long-term client relationships. Question 12. The review process indicates that a junior employee, in an attempt to expedite a client onboarding, shared a spreadsheet containing customer names, contact details, and account numbers with an external vendor without explicit authorization. The employee believed this was a standard practice for such requests. What is the most appropriate immediate course of action for the team lead? Option A. Immediately engage the data protection officer and initiate the company's data breach incident response plan to assess the scope and impact of the data sharing. Option B. Instruct the junior employee to immediately delete the shared spreadsheet from the vendor's systems and all associated communication. Option C. Inform only the immediate team members about the incident to avoid unnecessary panic among other departments. Option D. Assume the shared data was non-sensitive and advise the employee to proceed with caution on future requests without further investigation. The correct answer is A. Immediately engage the data protection officer and initiate the company's data breach incident response plan to assess the scope and impact of the data sharing. Explanation. The review process indicates a potential breach of data privacy regulations, specifically concerning the handling of sensitive customer information. This scenario is professionally challenging because it requires immediate and decisive action to mitigate risk, balance business needs with regulatory obligations, and maintain customer trust. The pressure to act quickly while ensuring compliance can lead to hasty decisions. The correct approach represents best professional practice because it prioritizes a thorough investigation and adherence to established data protection protocols. This involves identifying the exact nature of the data shared, the recipients, the purpose of sharing, and assessing the potential impact of the breach. By engaging the data protection officer, DPO, and following the company's incident response plan, the organization demonstrates a commitment to regulatory compliance, particularly under frameworks like the GDPR, if applicable to the exam's jurisdiction, assuming a common global standard for such assessments. This proactive and systematic approach minimizes legal and reputational damage and ensures that any remediation efforts are well-informed and effective. An incorrect approach that involves immediately deleting all records without proper investigation is professionally unacceptable. This action could be seen as an attempt to conceal a breach, which is a serious regulatory violation and an ethical failure. It prevents a proper assessment of the scope and impact, hindering any necessary notification to affected individuals or regulatory bodies. Furthermore, it could lead to the loss of crucial evidence needed for an investigation. Another incorrect approach, which is to inform only the immediate team without escalating, represents a failure in governance and reporting. It bypasses established channels for handling data breaches, such as the DPO or legal counsel, and delays the necessary formal response. This can result in noncompliance with mandatory breach notification requirements, leading to significant fines and legal repercussions. It also fails to leverage the expertise within the organization to manage the crisis effectively. A third incorrect approach, which is to assume the data shared was non-sensitive and proceed without further action, is a critical lapse in due diligence. This demonstrates a disregard for data privacy principles and a failure to assess risk accurately. Even if the data appears non-sensitive at first glance, a thorough review is mandated by regulations to confirm this and to understand the context of its sharing. This assumption can lead to a failure to notify affected parties or regulators, resulting in severe penalties. The professional decision-making process for similar situations should involve 1. Immediate containment and assessment. Understand what happened, what data was involved, and who was affected. 2. Escalation. Inform relevant internal stakeholders, including the DPO, legal, and IT security, as per the incident response plan. 3. Investigation. Conduct a thorough review to determine the root cause and the extent of the breach. 4. Remediation. Take appropriate steps to address the breach and prevent recurrence. 5. Notification. Comply with all regulatory requirements for notifying affected individuals and authorities. 6. Documentation. Maintain detailed records of the incident and the response. Question 13. The analysis reveals that a financial advisory firm is implementing new anti-money laundering (AML) procedures mandated by evolving regulatory requirements. The firm faces a challenge in ensuring all employees understand and correctly apply these new procedures within a limited time frame, while also maintaining operational efficiency. Which of the following approaches best balances regulatory compliance with practical implementation? Option A. A phased rollout of the new AML procedures, accompanied by comprehensive, role-specific training and ongoing support mechanisms for employees. Option B. Assigning the entire responsibility for implementing the new AML procedures to the compliance department, with minimal direct involvement from other operational departments. Option C. Prioritizing the updating of all AML policy documentation and internal manuals, with a plan to address employee training needs only after the initial documentation is finalized. Option D. Immediate, mandatory implementation of all new AML procedures across the entire firm, without prior dedicated training sessions, relying on employees to read and understand updated policy documents. The correct answer is A. A phased rollout of the new AML procedures, accompanied by comprehensive, role-specific training and ongoing support mechanisms for employees. Explanation. The analysis reveals a scenario where a financial advisory firm, operating under the Mahindra hiring assessment tests regulatory framework, assumed to be aligned with UK financial services regulations for this context, is tasked with implementing new anti-money laundering (AML) procedures. The challenge lies in balancing the need for robust compliance with the practicalities of employee training and system integration, particularly when faced with a tight deadline and potential resistance from staff accustomed to older methods. This situation demands careful judgment to ensure that the implementation is both effective in meeting regulatory requirements and minimizes disruption to business operations. The correct approach emphasizes a phased rollout of the new AML procedures, coupled with comprehensive, role-specific training and ongoing support. This represents best professional practice because it directly addresses the regulatory imperative for effective AML controls as mandated by frameworks like the UK's Proceeds of Crime Act 2002 and the Money Laundering Regulations 2017. By providing tailored training, the firm ensures that all employees understand their responsibilities and the rationale behind the new procedures, fostering a culture of compliance. Ongoing support mechanisms, such as dedicated helplines or refresher sessions, reinforce learning and address emerging issues, thereby ensuring sustained adherence to regulatory standards. This proactive and supportive strategy minimizes the risk of non-compliance and reputational damage. An incorrect approach that prioritizes immediate, company-wide implementation without adequate training or support would fail to meet regulatory expectations for effective AML controls. This could lead to procedural errors, gaps in detection, and ultimately, breaches of the Money Laundering Regulations 2017. Such an approach demonstrates a disregard for employee competency and a superficial understanding of compliance, potentially resulting in significant fines and sanctions from regulatory bodies like the Financial Conduct Authority, FCA. Another incorrect approach, focusing solely on updating documentation without practical training or system integration, would be equally problematic. While documentation is a component of compliance, it is insufficient on its own. Regulations require demonstrable application of AML procedures. Without training, staff would lack the knowledge to apply the updated documentation, rendering it ineffective and exposing the firm to regulatory scrutiny and potential penalties for failing to implement adequate AML systems and controls. A third incorrect approach, which involves delegating the entire implementation to a single department without cross-functional buy-in or clear communication channels, would create silos and hinder effective adoption. This lack of integrated effort undermines the holistic nature of AML compliance, which requires the cooperation of all relevant departments. It also risks overlooking critical touchpoints and responsibilities, leading to compliance gaps and potential regulatory breaches. The professional decision-making process for similar situations should involve a thorough risk assessment of the proposed changes, consultation with compliance experts and relevant stakeholders, and the development of a detailed implementation plan that prioritizes employee understanding and practical application of new regulations. This framework ensures that compliance initiatives are not merely bureaucratic exercises, but are embedded into the firm's operational fabric, thereby safeguarding against regulatory breaches and fostering a strong ethical culture. Question 14. The audit findings indicate that a recently implemented regulatory compliance policy designed to enhance data privacy controls is creating significant operational friction with the existing customer onboarding process. The policy mandates a new multi-factor authentication step for all new account creations, which is not currently integrated into the legacy onboarding system. The compliance team insists on immediate adherence to the new policy, while the operations team warns that forcing this change without system modification will lead to a substantial increase in onboarding time and a potential drop in customer acquisition rates. What is the most appropriate course of action for the head of operations? Option A. Initiate immediate discussions with the compliance department and the IT team to collaboratively develop a phased implementation plan that addresses the system integration challenges while ensuring interim compliance measures are put in place. Option B. Request an exemption from the new policy from the regulatory body, citing the operational challenges and the potential negative business impact. Option C. Enforce the new policy strictly as mandated by the compliance department, accepting the potential negative impact on customer onboarding efficiency as a necessary consequence of regulatory adherence. Option D. Advise the compliance department that the current system limitations make full adherence impossible and suggest they revisit the policy's feasibility in light of existing technological constraints. The correct answer is A. Initiate immediate discussions with the compliance department and the IT team to collaboratively develop a phased implementation plan that addresses the system integration challenges while ensuring interim compliance measures are put in place. Explanation. Scenario analysis. This scenario presents a challenge where a newly implemented policy intended to enhance regulatory compliance has inadvertently created a conflict with existing operational procedures. The difficulty lies in balancing the imperative of adhering to new regulations with the practicalities of day-to-day business operations, ensuring that compliance efforts do not cripple efficiency or create new risks. The pressure to demonstrate immediate compliance, coupled with potential resistance to change from operational teams, requires a nuanced and strategic approach. Correct approach analysis. The correct approach involves a proactive and collaborative engagement with the relevant stakeholders. This means initiating a dialogue with the compliance department to understand the precise intent and scope of the new policy, and simultaneously consulting with the operational teams to assess the practical impact of the policy on their workflows. The goal is to identify potential conflicts and collaboratively develop a revised implementation plan that aligns with both regulatory requirements and operational realities. This approach upholds best professional practice by prioritizing a thorough understanding of the regulatory framework, fostering interdepartmental cooperation, and ensuring that compliance measures are both effective and sustainable. It demonstrates a commitment to ethical conduct by seeking to implement regulations responsibly and transparently, minimizing disruption and unintended consequences. Incorrect approach is analysis. One incorrect approach involves immediately enforcing the new policy without further consultation. This fails to acknowledge the potential for unintended operational disruptions and could lead to significant inefficiencies, errors, or even breaches of other regulations if the policy is applied rigidly without considering existing processes. Ethically, this demonstrates a lack of due diligence and consideration for the impact on colleagues and business operations. Another incorrect approach is to dismiss the audit findings as a minor inconvenience and delay any action. This is a direct violation of regulatory principles that mandate timely adherence to new requirements. It exposes the organization to potential penalties, reputational damage, and a loss of credibility with regulators. Ethically, it represents a disregard for governance and a failure to uphold professional responsibilities. A third incorrect approach is to implement the new policy in a way that superficially appears compliant, but does not address the underlying operational conflicts. This might involve creating documentation that suggests compliance without actually achieving it in practice. This is a form of regulatory evasion, which is unethical and carries significant legal and financial risks. It undermines the integrity of the compliance function and the organization's commitment to ethical business practices. Professional reasoning. Professionals facing such a situation should adopt a structured decision-making process. First, thoroughly understand the regulatory requirement and its implications. Second, assess the current operational landscape and identify any discrepancies or conflicts. Third, engage in open communication and collaboration with all affected departments to gather insights and propose solutions. Fourth, develop a revised implementation plan that addresses the identified issues while ensuring full compliance. Finally, document the process and outcomes, and establish mechanisms for ongoing monitoring and review to ensure sustained compliance and operational effectiveness. This systematic approach ensures that decisions are informed, ethical, and aligned with both regulatory mandates and business objectives. Question 15. The evaluation methodology shows that a client has requested a series of trades that, while seemingly designed to achieve a specific financial objective, could potentially be interpreted as an attempt to artificially influence the price of a particular security. As a compliance officer, what is the most appropriate course of action to ensure adherence to the Mahindra hiring assessment tests regulatory framework regarding market integrity? Option A. Immediately report the client's request to the relevant regulatory authorities for investigation without further discussion with the client. Option B. Proceed with the trades as requested by the client, assuming their intent is legitimate and that the market will self-correct any perceived artificial influence. Option C. Engage with the client to understand the rationale behind the requested trades, explain the potential regulatory concerns related to market manipulation, and explore alternative, compliant trading strategies. Option D. Advise the client that such trades are not permissible and refuse to execute them, without offering any further explanation or alternative solutions. The correct answer is B. Proceed with the trades as requested by the client, assuming their intent is legitimate and that the market will self-correct any perceived artificial influence. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's desire for a specific outcome and the regulatory obligation to ensure fair and transparent market practices. The professional must navigate this by prioritizing compliance over client preference when the two are in opposition. The correct approach represents best professional practice because it upholds the integrity of the financial markets and adheres strictly to the Mahindra hiring assessment tests regulatory framework, which emphasizes ethical conduct and adherence to established guidelines. By seeking clarification and refusing to proceed with an action that could be construed as market manipulation, the professional demonstrates a commitment to regulatory compliance and ethical responsibility, thereby protecting both the firm and the client from potential legal and reputational damage. An incorrect approach that involves proceeding with the client's request without proper scrutiny would constitute a failure to comply with the spirit and letter of regulatory requirements designed to prevent market abuse. This could lead to regulatory sanctions, fines, and damage to the firm's reputation. Another incorrect approach, such as dismissing the client's request outright without attempting to understand the underlying intent or explore compliant alternatives, might be seen as poor client service and a missed opportunity to educate the client on regulatory boundaries. However, the primary failure in such cases is the potential for regulatory breaches. A professional decision-making process should involve a clear understanding of the relevant regulatory framework, a proactive approach to identifying potential compliance risks, open communication with clients to explain regulatory constraints, and a willingness to escalate concerns or seek guidance when faced with ambiguous situations. Prioritizing regulatory adherence ensures long-term business sustainability and ethical standing. Question 16. During the evaluation of a potential candidate's suitability for a role, a client requests access to the candidate's social media profiles to assess their cultural fit beyond the information provided in their resume and during interviews. The hiring assessment test is conducted within a jurisdiction that has stringent data protection laws governing the processing of personal data. Option A. Attempt to anonymize the candidate's social media data before sharing it with the client, believing this mitigates privacy concerns. Option B. Directly access the candidate's publicly available social media profiles and provide a summary of findings to the client, assuming that public information is fair game for assessment. Option C. Decline the client's request without further explanation, citing internal policy without referencing specific regulatory concerns. Option D. Inform the client that accessing and reviewing the candidate's social media profiles for this purpose may contravene data protection regulations and propose alternative, compliant methods to assess cultural fit, such as behavioral interview questions focused on teamwork and communication. The correct answer is D. Inform the client that accessing and reviewing the candidate's social media profiles for this purpose may contravene data protection regulations and propose alternative, compliant methods to assess cultural fit, such as behavioral interview questions focused on teamwork and communication. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a client's explicit request and the regulatory obligation to maintain data privacy and security. The pressure to meet client expectations, especially in a competitive hiring environment, can lead to shortcuts that compromise compliance. Careful judgment is required to balance client service with adherence to legal and ethical standards. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing regulatory compliance and client confidentiality. It involves transparently communicating the limitations imposed by data protection laws and offering alternative, compliant solutions. This upholds the firm's integrity, builds trust with the client by demonstrating ethical conduct, and avoids potential legal repercussions. Specifically, it aligns with the principles of data minimization and purpose limitation often found in data protection regulations, ensuring that personal data is not processed or shared beyond what is strictly necessary and legally permissible for the stated purpose. Incorrect approach is analysis, an approach that directly fulfills the client's request without considering regulatory implications is a significant ethical and regulatory failure. It breaches data privacy laws, potentially leading to severe penalties, reputational damage, and loss of client trust. This action demonstrates a disregard for the legal framework governing data handling and a lack of professional responsibility. An approach that attempts to anonymize the data, but does so inadequately or without proper validation, is also problematic. While the intention might be to protect privacy, insufficient anonymization can still allow for re-identification, thereby violating data protection principles. This reflects a superficial understanding of anonymization techniques and a failure to implement robust safeguards, leading to potential regulatory breaches. An approach that ignores the client's request entirely without explanation or offering alternatives fails to meet professional client service standards. While it avoids regulatory breaches, it neglects the client relationship and can lead to dissatisfaction and loss of business. It represents a missed opportunity to educate the client on compliance requirements and find mutually agreeable solutions. Professional reasoning. Professionals should adopt a framework that begins with understanding the client's objective, followed by a thorough assessment of applicable regulatory requirements. If the client's request conflicts with regulations, the next step is to identify compliant alternatives and communicate these clearly and professionally to the client. This involves proactive risk management, ethical decision-making, and a commitment to maintaining both client satisfaction and legal adherence. Question 17. Process analysis reveals that a financial services firm is considering implementing a new AI-driven trading algorithm that promises significant efficiency gains, but operates in a manner not explicitly detailed in current Financial Conduct Authority (FCA) guidelines. The firm's compliance department is tasked with assessing the regulatory implications. Which of the following actions best represents a compliant and professionally responsible approach? Option A. Delay the implementation of the AI trading algorithm indefinitely until the FCA releases specific regulations addressing AI in trading. Option B. Implement the AI trading algorithm based on the internal legal team's assessment that it does not directly contravene any existing written rules. Option C. Proactively engage with the Financial Conduct Authority (FCA) to seek clarification on how the new AI trading algorithm aligns with existing regulatory principles and to understand any potential new requirements. Option D. Proceed with the implementation of the AI trading algorithm, assuming that its use is permissible as there are no explicit regulations prohibiting it. The correct answer is C. Proactively engage with the Financial Conduct Authority (FCA) to seek clarification on how the new AI trading algorithm aligns with existing regulatory principles and to understand any potential new requirements. Explanation. Scenario analysis. This scenario presents a common challenge in regulatory compliance where a new technology, while offering potential efficiency gains, introduces novel risks that may not be explicitly covered by existing regulations. The professional must balance the drive for innovation and operational improvement with the imperative to maintain compliance and protect client interests. The challenge lies in interpreting existing frameworks and applying them to a new context, requiring a proactive and risk-aware approach rather than a passive adherence to outdated rules. Correct approach analysis. The correct approach demonstrates a commitment to proactive regulatory engagement and a thorough understanding of the spirit of compliance by seeking clarification from the relevant regulatory body. In this case, the Financial Conduct Authority (FCA), assuming UK jurisdiction for the Tech Mahindra hiring assessment test context. The professional ensures that the implementation of the new technology aligns with regulatory expectations and avoids potential breaches. This proactive step is crucial because it establishes a clear understanding of how existing rules apply to novel situations, thereby mitigating future risks and demonstrating due diligence. It reflects best professional practice by prioritizing regulatory certainty and client protection over immediate, potentially non-compliant, implementation. Incorrect approaches analysis. One incorrect approach involves proceeding with the implementation without seeking regulatory guidance. This is a significant regulatory and ethical failure. It demonstrates a disregard for the potential for non-compliance and exposes the firm and its clients to undue risk. The FCA's principles for businesses, particularly Principle 3, Fitness and Properness, and Principle 6, Customers' Interests, would likely be violated if the technology's use leads to client detriment or operational instability due to unaddressed compliance gaps. This approach prioritizes expediency over responsibility. Another incorrect approach is to assume that the absence of explicit prohibition means the technology is permissible. This is a dangerous interpretation of regulatory frameworks. Regulations often operate on principles and outcomes, not just explicit prohibitions. The FCA expects firms to conduct thorough risk assessments and ensure that their operations meet regulatory standards, even for activities not specifically detailed. Relying on a lack of explicit rules is a failure to exercise professional judgment and a potential breach of the duty to act with due skill, care, and diligence. A third incorrect approach is to rely solely on internal legal counsel's opinion without seeking external regulatory clarification. While internal counsel is valuable, their interpretation may not always align with the FCA's current stance or future expectations. The FCA may have specific interpretations or guidance that are not readily apparent from internal legal review alone. This approach risks a disconnect between internal understanding and external regulatory requirements, leading to potential noncompliance. Professional reasoning. Professionals facing such situations should adopt a structured decision-making process. First, identify the new technology and its potential impact on existing processes and regulatory obligations. Second, conduct a thorough risk assessment, considering both operational and compliance risks. Third, consult relevant internal policies and external regulatory guidance. Fourth, if ambiguity exists or novel risks are identified, proactively seek clarification from the relevant regulatory authority. Fifth, document all steps taken, consultations, and decisions made. This systematic approach ensures that innovation is pursued responsibly and in full compliance with regulatory mandates, safeguarding both the firm and its clients. Question 18. Quality control measures reveal a potential vulnerability in a data processing script that, if exploited, could lead to minor data inconsistencies for a small subset of client records. The project deadline is approaching, and the team is under pressure to deliver. What is the most appropriate course of action? Option A. Dismiss the vulnerability as minor, given the approaching deadline and the limited scope of potential impact, and proceed with the project without further investigation. Option B. Rely on the lead developer's informal assessment that the vulnerability is unlikely to be exploited and continue with the project as planned. Option C. Immediately halt all further development and implement a complex, resource-intensive security patch to address the vulnerability, regardless of its actual impact. Option D. Conduct a thorough, documented risk assessment to evaluate the likelihood and potential impact of the data inconsistencies, and then determine the most proportionate mitigation strategy. The correct answer is D. Conduct a thorough, documented risk assessment to evaluate the likelihood and potential impact of the data inconsistencies, and then determine the most proportionate mitigation strategy. Explanation. Scenario analysis. This scenario presents a challenge because the identified risk, while seemingly minor in isolation, could have cascading effects on client data integrity and regulatory compliance if not addressed proactively. Pressure to deliver a project on time can lead to overlooking or downplaying potential risks, making a robust risk assessment crucial. The professional challenge lies in balancing project timelines with the imperative to maintain high standards of data security and adhere to regulatory requirements. Correct approach analysis. The correct approach involves a thorough, documented assessment of the identified risk, including its potential impact and likelihood. This aligns with best professional practices and regulatory expectations for data handling and risk management. Specifically, under the Tech Mahindra hiring assessment tests implied regulatory framework, which would typically align with general principles of data protection and IT governance common in the industry, such as GDPR principles or similar national data privacy laws. Organizations are obligated to identify, assess, and mitigate risks to data. A documented risk assessment provides evidence of due diligence, allows for informed decision-making regarding mitigation strategies, and demonstrates compliance with the principle of accountability. It ensures that potential vulnerabilities are not ignored and that resources are allocated appropriately to protect sensitive information. Incorrect approaches analysis. One incorrect approach would be to dismiss the risk as insignificant without proper evaluation. This fails to meet the regulatory obligation to conduct a risk assessment and could lead to a breach of data protection laws if the risk materializes. It demonstrates a lack of due diligence and a disregard for potential harm to clients or the organization. Another incorrect approach would be to immediately implement a costly and time-consuming mitigation strategy without first assessing the actual impact and likelihood of the risk. This is inefficient and may not be proportionate to the threat, potentially diverting resources from more critical areas. It also bypasses the structured decision-making process required by good governance and risk management frameworks. A third incorrect approach would be to rely on anecdotal evidence or the opinion of a single team member to gauge the risk. This lacks the rigor and objectivity required for a professional risk assessment. Regulatory frameworks emphasize evidence-based decision-making and objective analysis, not subjective opinions, to ensure fair and effective risk management. Professional reasoning. Professionals should adopt a structured risk management framework. This involves 1. Risk identification, recognizing potential threats. 2. Risk analysis, evaluating the likelihood and impact of identified risks. 3. Risk evaluation, prioritizing risks based on their severity. 4. Risk treatment, developing and implementing mitigation strategies. 5. Risk monitoring and review, continuously assessing the effectiveness of controls and identifying new risks. In this scenario, the professional decision-making process would involve documenting the identified risk, performing a formal assessment of its potential impact on data integrity and client confidentiality, and then determining the most appropriate and proportionate mitigation strategy based on this assessment, ensuring alignment with relevant data protection and IT governance standards. Question 19. Regulatory review indicates that a financial services firm is undergoing a significant digital transformation, introducing new technologies and processes. The risk assessment team is under pressure to complete a comprehensive risk assessment report within an aggressive timeframe. Which approach best balances regulatory compliance, ethical considerations, and the need for a robust assessment in this context? Option A. Prioritize a detailed review of existing risk registers and historical incident data, supplemented by a high-level qualitative assessment of new technology risks to expedite the report generation. Option B. Delegate the risk assessment of new technologies to the IT department, relying on their internal assessments without independent verification to save time. Option C. Conduct a phased risk assessment, starting with a broad identification of potential risks across all new initiatives, followed by deeper analysis and stakeholder consultation on the highest priority risks, ensuring all findings are documented and justifiable. Option D. Focus exclusively on the risks associated with the most critical new technology components, assuming that other areas are adequately covered by existing controls to meet the deadline. The correct answer is A. Prioritize a detailed review of existing risk registers and historical incident data, supplemented by a high-level qualitative assessment of new technology risks to expedite the report generation. Explanation: this scenario presents a professional challenge because it requires balancing the need for efficient risk assessment with the imperative to adhere to regulatory requirements and ethical considerations. The pressure to deliver a report quickly can lead to shortcuts that compromise the thoroughness and accuracy of the risk assessment, potentially exposing the organization to unforeseen threats. Careful judgment is required to ensure that the assessment is both timely and robust. The correct approach represents best professional practice because it prioritizes a systematic and documented process for identifying, analyzing, and evaluating risks. This aligns with the principles of good governance and risk management expected by regulatory bodies. By engaging relevant stakeholders and utilizing a combination of qualitative and quantitative methods where appropriate, the assessment becomes more comprehensive and defensible. This proactive and structured approach ensures that potential risks are understood and can be mitigated effectively, thereby safeguarding the organization's assets and reputation. An incorrect approach that relies solely on historical data without considering emerging threats fails to meet regulatory expectations for forward-looking risk management. Regulations often mandate that risk assessments be dynamic and responsive to changes in the business environment and threat landscape. Another incorrect approach that bypasses stakeholder consultation, particularly with subject matter experts, leads to an incomplete understanding of risks and potential control weaknesses. This can result in a flawed assessment that overlooks critical vulnerabilities. A third incorrect approach that focuses only on high-impact, low-probability risks, while important, neglects the cumulative effect of lower-impact risks, which can collectively pose a significant threat. Regulatory frameworks typically require a holistic view of risk. Professionals should employ a decision-making framework that begins with clearly defining the scope and objectives of the risk assessment, referencing applicable regulatory guidelines. This should be followed by a structured process of risk identification, analysis considering likelihood and impact, and evaluation. Crucially, this process must involve appropriate stakeholder engagement and the documentation of all steps and findings. Regular review and updates to the risk assessment are also essential to maintain its relevance and effectiveness. Question 20. The performance metrics show a consistent upward trend in transaction processing errors over the past quarter, with a slight but noticeable increase in customer complaints related to transaction failures. The immediate business pressure is to reduce these errors and complaints as quickly as possible to maintain service levels and customer satisfaction. Which of the following is the most appropriate initial response to this situation? Option A. Halt all new transaction processing until a complete and exhaustive audit of the entire system can be performed to identify every potential vulnerability, regardless of the impact on business operations. Option B. Focus solely on addressing the customer complaints by issuing apologies and offering compensation, as this is the most visible impact, and postpone any technical investigation until the complaint volume subsides. Option C. Initiate a comprehensive root cause analysis of the error trend, involving cross-functional teams to identify systemic issues, and concurrently implement temporary, low-impact controls to mitigate immediate risk while the analysis is ongoing. Option D. Immediately deploy a significant upgrade to the transaction processing system, assuming the errors are due to outdated technology, and defer a detailed analysis until after the upgrade is complete. The correct answer is C. Initiate a comprehensive root cause analysis of the error trend, involving cross-functional teams to identify systemic issues and concurrently implement temporary low-impact controls to mitigate immediate risk while the analysis is ongoing. Explanation. This scenario presents a professional challenge because it requires balancing the need for timely risk mitigation with the imperative to conduct thorough and compliant assessments. The pressure to act quickly based on initial indicators, without a full understanding of the underlying causes or potential impact, can lead to misallocation of resources or the implementation of ineffective controls. Careful judgment is required to determine the appropriate level of investigation before committing to significant remediation efforts. The correct approach represents best professional practice because it adheres to the principles of a structured and evidence-based risk assessment process, as mandated by regulatory frameworks governing financial services and technology operations. This approach ensures that risk responses are proportionate to the identified risks, are based on a comprehensive understanding of the threat landscape, and comply with internal policies and external regulation. It prioritizes a systematic evaluation of the root causes, potential impact, and likelihood of the observed performance deviations before implementing solutions. This aligns with the ethical obligation to act with due care and diligence, ensuring that decisions are informed and justifiable. An incorrect approach that focuses solely on immediate, superficial fixes without understanding the root cause fails to address the underlying systemic issues. This can lead to recurring problems and represents a failure to comply with the spirit, if not the letter, of regulations that require robust risk management frameworks. Such an approach might also violate internal governance policies that mandate proper risk identification and assessment procedures. Another incorrect approach that involves overinvesting in extensive, long-term solutions based on preliminary, unverified data is also professionally unacceptable. This demonstrates a lack of proportionality and could lead to significant wasted resources, potentially impacting business operations and profitability. It also risks implementing controls that are not aligned with the actual risk profile, thereby failing to meet regulatory expectations for efficient and effective risk management. The professional decision-making process for similar situations should involve a phased approach. First, acknowledge and document the observed anomaly. Second, initiate a preliminary investigation to gather more data and identify potential contributing factors. Third, conduct a formal risk assessment, evaluating the likelihood and impact of the identified issues. Fourth, develop and implement proportionate risk mitigation strategies based on the assessment findings. Finally, monitor the effectiveness of the implemented controls and iterate as necessary. This structured process ensures that actions are data-driven, compliant, and aligned with business objectives.